US business activity inched up to a 26-month high in June. Welcome to Market Insight. I'm Elena Casas. S&P Global's PMI survey crept up to a reading of 54.6 for the US this month. That's the highest since April 2022, while price pressures subsided considerably. The US services sector is firmly in expansion territory, according to that survey, coming in at 55.1 today, up from 54.8 in May, while manufacturing was also positive at 51.7 when 51 was expected. Well, to dig into those numbers, I'm joined now by Satyam Panday, Chief US Economist at S&P Global Ratings. Satyam, welcome. Those relatively strong numbers contrast with some weaker data earlier this week. Retail sales in particular came in softer than expected. What have we learned about the US economy this week?
Well, overall, at least with the PMI for the month of June, it appears that the second quarter did end up a bit stronger. But like you mentioned, the data for retail sales and housing starts for the month of May, that did not really paint the same kind of a strength that June PMI is showing. But overall, it seems like the second quarter is running somewhere between 2 to 2.5% quarter over quarter annualized growth.
Are we seeing some weakness, though, in the US consumer? Are higher prices cutting into demand and leading people to pull back?
Yes, we have seen retail sales, so that would be more on the good side of the economy. That has been moving more sideways than anything else, especially when you look at the discretionary spending, like in the restaurants and bars. You see that the nominal spending numbers have been actually lower than the end of last year. So it does tell us that consumers are a bit cautious about their spending habits. And, it does make sense if you think about how the savings, the accumulated savings, and some of those transfers are sort of more in the back now. It's not there anymore. It's more about their own income gains that are going to lead to some of the spending gains.
In today's S&P survey, the input prices really do show some disinflation, but the Fed's preferred indicator, of course, is the PCE price index, due out next Friday. What are you expecting there? Will the disinflation trend be confirmed?
I think so. The month of May, both CPI and the PPI inflation data, which sort of gets into the Fed's preferred measure, they both showed that the disinflation trend may be reasserting after the upside surprises of first quarter. We think that the core PCE inflation will come in just a little bit under 0.2% on a month-over-month basis. That should make the year-over-year percent change at somewhere around 2.6, 2.7%.
Despite that, though, you're still not predicting a Fed cut before December, are you? So why not?
Well, we're not, because, like people say, 1 month does not make a trend, right? We had 3 to 4 months of upside surprises, and in May, yes, we did get a downward surprise, but we would like to see more of such data, at least 2% annualized rate, for a few months, just like Jay Powell has been saying. And we think, yes, September is in the conversation, but it's more likely still going to be December, the first rate cut in this easing cycle.
Are you expecting then that those high rates will act as a serious brake on the growth of the US economy before the end of the year?
Well, it will act as a headwind, but not a serious break. We are still in the soft landing camp. It is the Fed is trying to engineer inflation moving down to 2%, while at the same time keeping full employment intact. We do think that unemployment rate probably is going to drift up slowly higher from here on now, but inflation will also come back down in the next 12 months towards 2%.
What are you forecasting for growth in the second quarter? Are we going to see a bright picture?
Well, it will be brighter than the first quarter, but again, there are nuances. Domestic demand side of things, once you strip out net exports and inventories, they might be just about the same as we saw in the first quarter. But overall, GDP growth, we expect to be somewhere closer to 2.5% in the second quarter compared to the 1.3% that we got in the first quarter.
Satyam Panday of S&P Global Ratings, thank you so much for joining us. Well, that's your market insight. You can watch more videos on Reuters.com.